We're going to continue with the theme that we've had for well over a month now, is that a very complex bottoming process has taken hold and is continuing to develop right in front of us. And it is our opinion that after this next pullback, we're setting up for relatively viable low. And at minimum, we should get a really nice push forward into early 2023. And so we're going to kind of start with what's happening. A very seismic shift is happening right in front of our eyes, which I think is catching most people off guard. And that is new leadership is developing right in front of our eyes. We've been trained for, well over a decade that, to follow the FANGs, follow tech, where it goes, the market goes, and it's a leading indicator. And I believe that correlation is broken. Just to show you what I mean, what you're looking at right here in black is the S&P 500, and it bottomed on October 13th. And here are various FANGs, Microsoft, Google, Amazon, Meta, and they've continued lower after that. They're making new lows after the S&P 500. And so you see that and you think, the market's going to continue going down. And just to continue on that theme, if we take a look at, say, the NASDAQ 100, which is right here, it is very far away from taking back its 200-day moving average. We have a really corrective rally off the low, 3 waves up. It's currently about 40, let's see here. It's currently about 2% away from making a new high and only 11% from making a new low. And so you see this and you think to yourself that, the market's going down. And it's my thesis or my belief that, yes, in this next pullback, some choice tech names will probably make a new low. The NASDAQ 100 could. However, many stocks have bottomed and will make a higher low. And so by continuing to focus on tech and the NASDAQ 100, people seem to be missing out on boring indexes like the Dow. Which no one, is more of a placeholder these days, but it's a very value-oriented index. And just take a look at this. So it's taken back its 200-day moving average and continued higher. And this is the bear market trend, downtrend right here, and it's taken that back as well. And if we look at the larger structure, to me, that looks like a pretty clear 1, 2, 3, 4, 5. If this was a trend reversal, it would be more of a straight shot down. This is a very overlapping, messy correction, which tells me it's part of a larger uptrend. And so I'm expecting the Dow to make new highs in this coming rally that we're anticipating, this continuation of this rally. And to continue with that, if you look at some other pretty boring sectors that are very important as leading indicators to markets, the transportation sector, very important to monitor. Taking back its 200-day moving average, retesting it as we speak, reclaimed its bear market trend line, all very bullish. And this is important. Whenever you see a bounce off of a low, the question is it 3 waves or 5 waves? 5 waves. And why that matters is a 3-wave is a correction within a larger trend. If the trend is down, then your bear market rallies would be 3 waves corrective, right? And so this is our first attempt. 1, 2, 3, failure. The next attempt, 1, 2, 3, failure. And here we are right now with a 1, 2, 3, 4, 5-wave move off the low. To me, that is success. Taking back the 200-day and reclaiming the bear market trend line. And it's actually closer to making an all-time high than, it's about 50% for making an all-time high versus making an all-time low. So I look at this economically sensitive sector, bottoming before the S&P 500, giving a 5-wave move off the low, reclaiming very key psychological pivots within a bear market. And to me, that looks quite bullish. And if we take a look at other sectors like financials, similar pattern showing up, taking back the 200-day right here, reclaiming the bear market trend line, giving us 5 waves off the low, very clear 5-wave development off the low. And it's actually about 17% away from making a new high and 16% away from making a new low. And we can continue with this theme right here. One of my favorite, it's not just value. There are some choice tech areas, names specifically, as well as micro sectors that are really starting to look interesting to me. Semiconductors, for example, which tend to lead markets, it's definitely been a leader in this bear market. So I'm paying close attention here, but it's failed at the 200-day, and I imagine that we're going to probably get a retest soon. Broke out of its bear market trend line, and what we have is a really clear developing 5-wave pattern. You see this gap right here, this gap and go. Those tend to happen right in the middle of third waves. Third waves are your big moves, And so to me, this looks incomplete. It looks like a 4, and then we need one more 5 higher before we get the completion of this big move off the low. But semis, I think, have a lot more room to run. They're 45% from all-time highs, 23% from all-time lows. And just for reference, the NASDAQ 100 is about 10% away from lows. So this is a sector within tech that I believe will continue to lead, along with value. And so we've gone over various global markets, stocks within the U.S., the Dow, all these stocks, all these markets look like they put in a pretty major low, and that money is flowing into these value names while selling your high beta and your choice tech names. And so what we are expecting is this, and this is what I would be looking for in the next week or two, is if we take a look at the S&P 500, which is my benchmark that I follow, we have a nice 1, 2, 3, 4, 5-wave rally off the low. It's following this trend channel pretty closely, and these are the levels that matter right here. Red for me means very strong. Black is worth noting. And so if we break down below yesterday's low, which was around 39.50, I would expect this rally off the October 13th low to be in place. If we can hold that and then break out above the high from today, then what I think we can do is push a little bit higher. What matters to me is how the market is trading into the middle of next week. There's a big cycle cluster coming in mid next week, and if we're trending up into it, to me, that's going to be a local top, which would see a pretty sizable pullback that would hold the lows, in my opinion, before setting up for the next bigger rally, the big part of this rally coming up, and that would be a viable low, in my opinion. Worst case scenario for this rally would be, I think we get a move up into 42.90, 4,300 into early 2023. That would be worst case scenario from what I'm seeing out there. If we've topped here, this would be the best case scenario, in my opinion, for the rest of 2022, that this was our top, and we're beginning this downtrend right here, and we trend down into mid next week, late next week. That would likely be the correction that we're looking for, the pullback that we're looking for. That would be your viable low, and it's setting up for a really nice run into the end of the year. But we continue to see these signs all over the place that the market is changing right in front of our eyes, and you just got to pay attention. You can't just look at one index and think that you know what's going on. The last thing that I will show is rates. We've been talking about rates for a long time. The two supporting markets that have been affecting this bear market and pulling stocks down have been rates and the US dollar, all a response to inflation and Federal Reserve policy. And the bond market is, the way I look at it is the Fed is usually wrong, the bond market is usually right. And so you want to follow the bond market. And we call the low in bonds back here in late October. We think that it's more than confirmed that right now. We have a very clear A, B, C right here with a 1, 2, 3, 4, 5. I think that we're coming to the end of this move, which lines up with this pullback in the S&P 500. But we're getting higher right here on less momentum and less volume. Very clear 5-wave move right here. And so rates, I think, have put in a bottom like with most equities, and it's confirming that we're setting up for a viable low pretty soon. The US dollar has put in my opinion, a very large degree top. We were expecting one more high, but it looks like this was the high right here, a truncated move, which are rare, but whenever you see those, it tends to see a reversal in the opposite direction in a big way. As you can see, we took out this trend line right here. And this was the big psychological move, this 107.5 area. Every time we came here and tested it, we had a huge response off of it and continued higher. And we have just plowed right through it and have failed to retest it. That's also a sign of the weakness in the dollar, which I think these two supporting markets are going to continue to relieve pressure on equities, specifically your high beta tech names, once we get this next pullback in place. So I hope that was helpful. If you like this information, I have a YouTube channel. Please sign up below. We also have a free site where we actually manage a live growth portfolio in tech and crypto. And we have been for the last 3 years. And we do free blogs. And we also have premium information where we sell technical and fundamental analysis of this caliber on an institutional level. And if that interests you, please sign up there at the iofund.com. Thank you very much.